Investing at some particular point can prove to be a marathon. It can be so challenging, either because of the financial jargons that are used for the different investments, also maybe by the saturation of different investments that are coming into the market every day, and also the rise of scamming when it comes to the investment opportunity or how you can be able to make your money invested. But you don't have to worry about that, because I have done the heavy lifting and I have prepared this video where we are going to discuss 7 investment opportunities you can be able to consider in Kenya. At the end of this video, you'll be able to understand the 7 investments better, how you can be able to get started, and actually a bonus on which companies you can be able to consider, their licensing, their requirements, and definitely how you can be able to go about it to get started in the different investments. Hi guys, welcome again to another episode of Financial Literacy. My name is Jane Dishu and I'm a financial advisor based in Kenya. The first investment that you can go for is government securities. So government security is where the public can be able to lend to the government. So it's basically like you as a Kenyan citizen giving the Kenyan government money in form of borrowing or in form of loans, whatever you would want to call it. And then in return, they're going to be paying you an interest every year. And that interest is called a coupon, because now they owe you. And then they give you a time period where you can be able to refund their money. For short-term borrowing, those ones are called treasury bills. So this is anything below 1 year. For example, if the government is borrowing within maybe 1 year or 365 days, that is called a treasury bill. And if the government is borrowing for more than 365 days, those ones are called government bonds. So for these ones, you take a longer period of time before you get your money back. So when it comes to government security, this one is the most safest mode of investment when it comes to the investment, because it is run and regulated by the Central Bank of Kenya. 2, it purely depends on the economy of a country, and in this case, the Kenyan government. So definitely our economy as the Kenyan government, definitely we have money, or we are able to run our economy well. 3, it gives you a guaranteed return on investment. So the coupons or the interest that are paid, they are going to be consistent for the next period of time. So most of the time, people or investors who consider this type of investment are those people who are looking either for fixed income, or they're looking to receive a fixed maybe return on investment. They don't want to risk. The second category of people is any person who is actually a low risk investor. Definitely, because the risk involved in this kind or type of investment, most of the time it's low risk, because the only time you can actually lose your money is when maybe the government go maybe into bankruptcy, which is a very rare case. So at this particular point, since you are not a risk taker, you can consider this for your initial investment, or just make sure that you're balancing your investment portfolio. So how do you actually get into a government bond, or how do you invest in government security? So recently they have come up with an application, so you can be able to download the application on your Play Store or Apple Store. The application is called, in spelling, DHOWCSD. So you can call it down CSD or whatever it is you would want to call the application. So you can be able to download that application, register, and the registration process is actually opening your CDSC account. And then once you do open the CDSC account, you can actually be able to bid for your maybe treasury bills or the treasury bonds. And if you would want more information about when they are auctioning or when they have a bond that is available in the market, you can actually be able to get that information in the Central Bank of Kenya. I'm definitely going to link the link down below. You can be able to go to that portal and you can be able to see the different information, and you can be able to invest in both treasury bills, and also you can be able to get to invest in treasury bonds. The second investment that you can consider is stocks. So stocks is where you want to own a part of a company, or in another term, they are called shares. So it's basically you deciding that I want maybe to buy a part of a certain established company. So I become a shareholder, and return I'm able to earn maybe in 2 ways. So you able to earn in 2 ways. One, you either get dividends as a shareholder. So that means in case this company is making profit, you're able to share into the profits in form of dividends. Most of the time it's paid twice a year, or it's paid annually. Definitely, I have prepared a whole YouTube video detailing on how you can be able to get into stock market or into the stock market, and how you can be able to actually be able to invest. For this context, of course, we are going to discuss how you can also be able to do this. And then The second way you can be able also to earn a return on investment on stocks is by capital gains. This is where a company grows into its capacity, or maybe the company grows into the capital gain. So at the end of the day, your share prices go up, or your shares prices go up, and you're able to make the margin. So this means if you invest in stocks, you're taking a risk. So you need to be a very, very conscious investor. And at this particular point, we actually have two types of stocks that you can be able to take advantage. We have the local stock market and we have the international stock market. And for both of these two, you can be able to buy individual stocks. So individual stock is where maybe you go to the local market, you can consider maybe buying Safaricom, Equities, Sasini, or whatever company, an individual company. You put your risk into that investment or to that company and you wait until it grows. And then there's the index fund. Index fund is where you're able to buy stocks, but not for one company. So in the local market, you can try the NSC 20 or NSC 25. So this is where you're buying Safaricom, you're buying Equity. This is a fund. This is something that is quite regulated. So the risk is not the same as you getting the individual stocks. Remember, when you invest in individual stock, in case of a market crisis for that particular company, you lose. But when you are doing a balanced one in an index fund, remember it is quite balanced. So if this one is not doing well, the other one can be able to complement. So you can do that locally or you can do it international. Definitely for individual stock in the international market, you can try the examples of Tesla, and maybe you can also try Nvidia. Those are some of the companies that you can also look at. There are so many of them. And also you can also try in the index fund, you can try S&P 500, which is a famous one. I know anyone who know about index fund, they definitely know that one is a famous one. So when you're investing as a stock market investor, you need to identify if you're going to do local, international, and for each of the category, you're going to decide if you're going to do individual stock or you're going to do corrective stock or the index fund. And then after you have done that, of course, there's a process to each of them, but the basic of it is to have a CDS account. Once you have been able to open one, you're going to look for a stock broker. Most of the time, you're going to find most of the stock brokers offer both local and international. So some of the stock brokers that you can actually be able to consider in the stock market, you can actually look out for Standard Investment Bank, FIDA Investment Bank, Kingdom Securities. You can also be able to look at Deere and Blair. There are so many brokers in the stock market, so you can be able to look at the one that has the lowest management fee, and that one is what we actually look. Most of the time the services are the same for each stock broker. The only difference is the management fee. So definitely you're going to look at the stock broker who has the lowest management fee. For those ones who are looking for international stock, you can try Dovu, you can also try HFM, you can also try XNES. So those are some of the few that you can be able to look at. Definitely also for the stock brokers, you're going to look at the management fee. That is the most important thing. And once you do that, if maybe it's individual stock, you're just going to go to the application. Most of them have a website or an application, and you can be able to place your bid and you can start investing and you can become a stock investor. One thing I want you to note is when you're investing in stocks, you cannot afford to be a lazy investor. Most of the stock investments, they need you to be an active investor because you'll be required to look at the market. Also, it's a high risk because you cannot predict if a company is going to be run the same way with the same management. Sometimes it might even find you by surprise that a company has gone down, and you risking your money. If it's money you are not able to lose, you need to be told, you need to be there. You cannot afford to be a lazy investor when it comes to the stock market. The third investment that you can consider is the real estate, or what we call REITs these days. So these days we don't do the analog way or the traditional investment in real estate. So before you could just buy a piece of land and maybe become a landowner. So these days you don't have to become a landlord. You can actually be able to invest in real estate without you having to own any properties. Things have been made more digital, more easy. Technology has come in place, better investment opportunities and better ways of doing it. So if you're doing the traditional way of investment, you can still do that, because I know there are people who are interested into doing that. You can basically do that, where you buy a piece of land, do a development, and now you own a property and you can be able to get maybe return on investment from the rent paid from maybe your tenants or something close to that. But if you you're looking for the digital, or what we are calling the modern day investment in real estate, you can actually try the real estate investment trust, or what we call REITs. So REITs give you an opportunity of you being able to invest, but at this particular point, you give this money to people who are managing property or who own properties. So it's where, like, a group of investors, you put your 5,500, and then when we invest that amount of money in REITs, that company is the one that is going to be doing the heavy lifting, managing maybe the properties that you're getting the rent from, or the properties that you're getting the return on investment. The good thing with the REITs is you get a dividend every year. So you're able, because now you become like an owner of that particular apartment, you get to have like a passive income coming through, and you don't have to do the heavy lifting of maybe property, land owning, the levies, managing people, and all those things. So it's the most modern and easier way of doing it. And also the liquidity aspect. Remember, when you do real estate, the other way, analog way, before you liquidify maybe a piece of apartment like this one, or before you liquidify a piece of land, it might take you some time. But when it comes to REITs, it's easy to actually liquidify. And also the amount of money that you need to do for real estate in the traditional way, it's actually very high. You need like millions of money for you to set up a structure and to become operational and have your own units. But when it comes to REITs, you actually need as low as 5,000 Kenya shillings. So you see, it's something that you can be able to afford. So if you're a person who's still interested in making sure that you're getting some rent somewhere, some dividends, and you own some property, REITs is something that you can still consider. But if you have that much of maybe liquidity and you have a lot of money, still having the real estate the old or the traditional way is still something that you can be able to consider, because at the end of the day, we always say you choose what works for you. For the REITs, you can be able to look at the different REITs that we have in the market. We have the ILAM REIT, we have the Akon REIT, and we also have the Lab Trust, which you can be able to talk to these different companies, and you can be able to actually start investing from as low as 5,000. You actually have your REITs investment, and you can always say that you own at least a unit, or you have invested in real estate. The other investment is the unit trust. So when you hear about unit trust, I know some of you have heard about it, and today I want us to just discuss more about it. So these ones are collective investment scheme. So what this means is where investors are allowed to bring their money to a certain company, and this company is able to distribute or to choose investments that they can be able to invest in. Most of the time, it's maybe in the government security or in the stock market. So for people who are not active investors, for people who feel I'm lazy, I want to invest in the stock market, I want to invest in the treasury bills, but I'm so lazy to do these things, I'm so lazy maybe to run them through the market, this is actually for you. Unit trust solves that problem. If you're a person who feel I want to start low, I still want to invest in bonds, I want to invest in stock, but I just want to start low. So collective funds help you with that opportunity. So when you're choosing collective funds, you're going to concentrate on where is the fund investing. So the unit trusts actually have different categories, and the different categories are definitely determined by where they are investing. So the first one and the most famous one is the money market fund. So that is the first unit trust. That one I know like most of us have heard about it. So money market fund, most of the time, they invest either in treasury bills. So it's quite short term because it invests in treasury bills. The second place they invest in is in commercial paper and also bank deposits. So at this particular point, you know, if we are giving like maybe the lending to the local maybe cooperative, or maybe to the local companies, most of the time these are short-term loans. So this is why the treasury bills are short-term, and even the commercial papers, and definitely the deposits. So most of the time you're going to find money market fund allow you to withdraw your money anytime. It's because they're able to invest their money in those places. Two, it's considered low risk because treasury bills don't have so much of the risk. Also, commercial paper don't have so much of the risk, and also the fixed deposit or the fixed bank deposit, they don't have so much of the risk. So if you're a person who is considering to build an emergency fund, short-term goals, a money market fund is actually one of the investment or one of the unit trusts you can consider. The second investment that you can be able to consider under the unit trust is the fixed income fund. So as the name suggests, it means that your investment or you're going to invest for a long period of time or for a fixed period of time. So if you're a person who wants to invest in the government bond, and you don't want to invest in the government bond, you just want to go through someone because maybe the amount of money that you want to put out there is not like the minimum amount of money in the government bond. Like I mentioned, the minimum for government security is 50,000 Kenya shillings. So if you don't have the 50,000 Kenya shillings, the fixed income funds, or the minimum for most of the unit trust, is 5,000 Kenya shillings. So you see, you get an opportunity of investing in bonds without having to invest in bonds. And definitely, because it's a fixed income fund, depending on which bond they're investing in, it might be fixed for a certain period of time. And also, this also means if you're investing in unit trust, you're not going to get the coupon that that particular bond is going to get. Of course, they're going to charge a management fee, so you might be getting less amount of money. The same with money market funds, or the same with any other unit trust that you're going to have in this class. The third unit trust is equity fund. So as the name equally suggests, equity funds is when you want to invest, or this particular unit trust actually concentrate in investing in the stock market. So if you want to invest in stock, but you don't want to gather the risk, you actually get an equity fund. Remember, the stock market is quite a high risk investment. This means that also a balance fund is also a high risk because it's actually investing in the stock market. So as I said, in all these classes, you can be able to invest with as low as 5,000. So rather than what you would do in the stock market, where maybe you might be required to buy maybe a minimum of 100 shares, a minimum of this amount of money, for this one, it cuts across. And also the liquidity. I know you can buy and sell in the stock market, but for these particular funds, they also help you to access your money anytime you actually want. That is the best thing for unit trust, or for people who are trying to invest in unit trust. The last one is a balance fund. Mostly for the balance fund, as the name suggests, they are going to balance everything. So they're going to invest, of course, in the government security. They're going to invest some amount of money in the stock market. So it become a medium risk. Remember, the money market gives you the high risk. Of course, the fixed income fund give you a longer period of time, but also low risk. But the equity gives you a high risk because of the stock. But now the balance fund balances everything. It balances the period of time, it balances the return on investment, and also the risk of you losing your money. So if you are a person, I'm not sure if I should take the risk, I'm not sure if I should take the risk. So this is an investment that you can consider, or a unit trust that you can be able to consider. So some of the people that can consider investing in the unit trust is anyone who actually wants to have more liquidity and flexibility of just depositing any amount of money they want. Also someone who is looking into investing, but they don't maybe have the time to actually go and follow up on the market structure. So those are the two types of people who can be able to consider this. And finally, for the unit trust, there are different companies that actually you can be able to open a unit trust, or you can be able to get the unit trust and invest in them. You can actually look at ICA Lion Group, you can look at Britam, you can look at NCBA, and so many of them, mostly given by insurance companies, and also they're given by investment company. So the basic thing is to make sure that these companies are actually registered by the Capital Market Authority, and also making your due diligence to look at what the company is doing when it comes to the return on investment. Most of the time, you'll find the companies that are giving higher return on investment on a low risk investment on the unit trust. Most of the time, either they are new companies. Also, you need to do your due diligence before you actually open an account with any of them. And for more details on the unit trust, they're actually always published on the Daily Nation. You can actually get a copy and get more of these details. So another investment that you can also be able to get is special funds. So special funds, they are also collective funds, but this one concentrate in investing in the local market and also global market. So these ones, they are almost like the same with money market fund, but they have higher return on investment because they don't only concentrate on the local market that like the unit trust, but they concentrate on the international market also. So as the name also suggests, it means investors bring their money, and then the companies are going to decide on where they're going to invest, either in the local stock market or in the global stock market. So for the special funds, because they're investing in the global market, there's some risk that is actually involved when it comes to this investment. So most of the time, you're going to find the return on investment is high, the risk is also very high. So you might also need to consider that the amount of money that you put there might actually be traded or might be subjected to risk. Some of the companies that actually are offering some of these maybe special funds are the Mansa X. Mansa X is by Standard Investment Bank. We also have the Oak Fund. Oak Fund is by Faida Investment. We also have Kuza Momentum. This one is by Kuza Asset. And also we have Old Mucho Special Fund by definitely Old Mucho. We definitely also have Etika special fund, which is also offered by Etika. The basics of all this is also to make sure that you are doing your due diligence on the company, and also you are considering the risk that you should also be able to absorb or get. But the advantage is you can also be able to contact me as your financial advisor, because I have partnered with Mansa X, and we can be able to make sure that all of you have a Mansa X, or you can successfully be able to open a Mansa X account. Our last investment is commodities. So I know commodities, you might have heard about them. This is where maybe you can own a piece of gold, you can be able to own maybe oil, you can be able to own gas, you can be able to invest in coffee, own even cotton. So for this particular investment, they are also offered by some of the investment or some of the brokers, and you can be able to actually choose on investing on the different one. And let me tell you, something like gold can actually make you very rich. Something even like oil can actually be able to make you very rich. So you're going to decide on what do you want to actually invest in, because I know the investment range from maybe the gold and silver and all those things. It also ranges maybe from the energies like oil, petroleum, and all that, the gas and everything. Definitely you can be able to invest in the different sectors depending on where you want to put your money. And some of the brokers that you can actually be able to work with, you can work with Dovu, you can work with Xness, you can work with HFM, you can also work with the different brokers. I know when you just search online, you're going to get, those are some and the few that I have seen, they also offer these opportunities, meaning as a Kenyan, you can definitely be able to own a piece of gold, oil, or wine, or anything that you would want to actually buy or trade or invest in. Finally, of course, these are not the only investments that we have in the country. Of course, there are other investments that you can be able to look at. I have only mentioned the investments that have been regulated, that have been registered, and investments that I know that you cannot be scammed, and also investments that I know it's easy to start on them and you can be able to continue in building the investment portfolio. And also, in case you would want to learn more about finances, and if you have enjoyed this video, make sure to subscribe, also comment and share to anyone who you know might benefit from this video, because I'm going to also do other videos explaining each of these investments, also detailing more about them. So make sure to be subscribed so that you'll be notified anytime we post a video. And until next time, thank you.